Shall we begin? It's on. Okay. Well, good morning, everybody, and welcome back to this session. It's a great pleasure for me to have Philipp by my side. Before we get into the session in great detail, I just want to, Philipp, maybe with you, frame what is it that we mean when we talk about diversity, equity, and inclusion, or DEI. This term has been bantered about for a while now, and like many things that are impact, this is also meant to evoke some level of impact and investable aspects of impact with this term. And sometimes I'm puzzled as to how fund managers, and particularly in the private equity and venture capital space, can actually not only address diversity, equity, and inclusion, but profit from it. So it'd be great to hear from you on what you think on those characteristics and experience that you have with Big Society Capital for that. So maybe if you would like to just introduce yourself very briefly, and then we can get into some Q&A.
Thanks, Vipul. Hi, everyone. My name is Philipp Essl. I'm Senior Director for Impact at Big Society Capital. We are a dedicated impact fund in the UK, a fund of fund. We were set up in 2012 by Sir Ronnie Cohen with investment from 4 mainstream banks and dormant accounts, with the sort of the mandate to operate as a fund of fund, but also to sort of develop the social impact investment market in the UK. So we work and invest in sort of impact specialists, fund managers, but we also invest increasingly in commercial fund managers that are on their way to impact.
Thank you, Philipp. And I'll just ask you to maybe talk a little bit about, why DEI is important from your perspective, from Big Society's Capital's perspective. And what are you trying to address? What are you trying to achieve through the investments that you make or the projects and transactions that you structure? And I'll also say, before you get into Big Society, that, my own view is that DEI, if you were to break that up, is a very context-specific issue, country-specific, and almost in some cases regional and local-specific. So what plays from a DEI perspective in the US could be very different from what plays from that perspective in the Netherlands, or Saudi Arabia, or the Fiji Islands, and maybe let's keep that in mind, that this is not an area, and like many things in impact, an area that doesn't lend itself easily to one size fits all. So maybe with that, you want to give us a perspective on how the banks came together and what were you trying to achieve in at least the UK context when you were starting off.
And I'll just echo that. I think the context specificity, I think that is definitely important, and even within the UK and within our work, it is heavily context specific in the way we approach it. Maybe just from the outset, I will sort of fall back to using the acronym EDI. It's just the way we talk about it within our organization, so just bear with me. I think we're talking about ultimately the same thing. I think for me, personally, as an organization, a useful starting point or realization was that ultimately there's nothing like an equalities neutral investment. So if you just stay for that for a moment, we invest ultimately in products and services that people can access in a certain sort of system, certain structure. So there's nothing, you invest within a given structure, and either you exacerbate the existing structure or you change it, but you can't really be neutral. And I think that sort of simple realization is actually really, really powerful, because it really sort of underpins that call to action. And we look at it then therefore in 2 ways. I think one is the sort of the risk side, if you want. So without actually taking an EDI lens, we really run the risk of exacerbating existing inequalities. In other words, if we want investments to really address imbalances, inequalities that we're facing in our societies, then we need to take an EDI lens. I think there's also then an upside, and I think we'll get to that in our conversation, which is we have seen fund managers take an EDI lens to their investments and actually have been very successful in doing so. So in other words, invested in underlying enterprises that actually have done really well. So it's not just therefore investments with sort of an EDI impact lens to it, but actually also investments with attractive financial returns.
So on that last point, Philipp, in terms of attractive financial returns, I think at least some of us get the notion that at an enterprise level, addressing or dealing with diversity, addressing issues of equity among various groups of people, and making the environment more inclusive to conduct your business is a good thing to do. So if I'm JP Morgan or NatWest Bank, I perhaps over time will have policies that deal with DEI issues within my own firm. But when I step back and say, okay, how do I as an investor, in a way, profit and make a financial return from that aspect, sometimes I struggle. So what are the things that you look at, and what are some of the examples that you have seen where actually applying that DEI lens to a potential investment opportunity has yielded positive results?
Right. It's a great question. I think to answer that, maybe a step back, I think you have to look at it at various levels, and that's certainly what we within BSC aspire to do. So we look at EDI issues, in terms of our own organization, and then our sort of impact chain, fund managers. We look at it at our strategy level, which is, I think, really important. So what do I mean by that? I think here in the room, probably those who are already investing for impact often sort of define the impact goals around themes. For us, it's a little bit different because we are a market building organization. So we have market systems that we want to help build to channel more capital to impact. One of them is, for example, venture. And so we define strategy at that sort of level. And to your point around context, it really matters, therefore, then what market system we really look at. It's very different from a sort of social property system or market vis-a-vis a venture market. But for example, in venture, specifically, we do realize, it's quite obvious, and other speakers have referred to that there's a great lack of diversity, gender diversity, ethnicity diversity, particularly among founders. So we try to understand those imbalances and then also embed EDI goals in our strategy. So in the way we sort of think about it, that it's embedded. And that then channels through in terms of actually when we are looking for investments. So to give you then an example in the sort of the venture space, one investment we made a few years ago was into a fund manager called Ada Ventures. And the thesis around Ada and their first fund is very much to look at overlooked founders and overlooked markets, right? So they're saying it's a huge diversity issue that we are missing out, not just in terms of impact, but also on business potential, right? So the thesis is therefore, or the way they execute this thesis, just to give you an example, is they really then build up quite an incredible scouting network. People who are embedded, people with access to overlooked communities that might be ethnically overlooked in terms of gender, disability, etc. So geographically overlooked, but build up a scouting network that helps them build different pipeline, right? And so you can see the sort of the impact angle to it, but it's also actually then from a sort of commercial perspective, it's very powerful. So in a very, what is currently a very hot market, to build pipeline and to look at places where others don't look and have access to those potential founders is a great advantage. And you can sort of think this through in terms of, an entry price, when you take a certain equity stake, potentially being lower priced, etc. So a number of advantages also on the sort of commercial financial side.
So it sounds a bit like some of the other areas of investing where one says there's scarcity value in sourcing investments where people are not looking, so therefore you find more investable propositions. And then if your timing is correct, others follow, and therefore you then have amplification of returns. This is in a way, I think I was saying earlier, I spent some decades in emerging markets in the early 90s. That was the thesis, that people were not looking at emerging markets, but yet there were very, very great opportunities in those economies. And the world followed suit, and today emerging markets is a very, very developed asset class. And what you're arguing, I think, that investors, if the timing is right, and you're suggesting the timing is now, here's an opportunity for you to look at, and people will discover it over time, and you will be early entrants in this space. Is that correct?
I think that's right. Yes, and we've sort of seen it play out in this example in terms of how I think the thesis holds, right, in terms of the underlying founders and the success that you see there, but also in terms of the LPs that come in the broader interest. And I think the conversation, the theme today speaks to that, the sort of the increasing interest and sense of urgency also from asset owners, asset managers to say, we need to do something about this. So I think it's sort of different things that sort of align here.
Great. I've got a bunch of other questions, but I'm mindful of time, and I want to also have, because I think this is a fascinating area, and I want to see if the audience wants to probe a little bit more on certain aspects of DEI, either in the room or online. So please raise your hand if you have any questions for myself or Philip from the audience. And I don't know who our online monitor is, but do we have any questions online as well?
We don't have at this moment.
We don't have at this moment, okay. And in the audience is still trying to figure out what the acronym means, whether it's DEI or EDI. And actually, Philip, it's interesting that we talk about diversity, equity, and inclusion, but at some point, at least in the UK, when you were setting up, it's become EDI. Is there some genesis to how the equity aspect became more prominent in the UK? And since you refer to it as EDI?
Yeah, I don't have a good answer to that question. So I hope that somebody in the audience will ask a question, but yeah.
One of the things that I think about when I look at these sort of big societal issues, and not to make a pun on the name of your firm, Big Society Capital, but I often wonder, is it the society that gives us the opportunities to look at, or societal changes that will give us the opportunities to look at, or are we, in some respect, ahead of societal changes in trying to find those opportunities going forward? So I'm just wondering what your thought is on that point when it comes to this whole space of DEI, because one could argue, say in the US, nobody was really thinking about DEI until Black Lives Matter. The Black Lives Matter movement became very prominent. In the UK, you've had affirmative action sort of programs and things like that for the BAME community, Blacks, Asians, Middle Easterns, and so forth. And that's true in many countries around the world, right? So I'm just curious on your thought on what comes first in that area.
Well, I mean, the honest answer is I think when it comes to EDI, we have been playing catch-up. And it's been very much in the context of Black Lives Matter, COVID, where we have been sort of confronted with the urgency to address sort of inequalities, inequity issues within our society, and then more narrowly, I guess, within the sort of the financial system that we operate in. So I think that's been a catch-up. More broadly, though, the way we look at it, and that's partly sort of the history and where we are coming from, is we always talk about starting with the social issues. So we are a UK-focused investor. So our starting point is, okay, what are the sort of the entrenched social issues that we are facing in the UK? Then we take a step back and say, okay, where do we see business models that can play a role in addressing these social issues. And I think we sort of probably agree that investment is not always the answer. It's always a sort of a much broader picture. But where do we see opportunities right now or emerging in terms of business models that can be part of the solution? And then the question is, okay, so understanding therefore the sort of the investment needs at the enterprise level, but also the needs and interests from investors. How do we match that? How do we connect that? And that's where historically we've played, I think, a big role in terms of developing products that ultimately enable enterprises and investors to connect and to allow for that capital flow. But to your question, I think it starts with the social issues and really understanding them. And a little bit the conversation we've had, today and early on. It's the same now with EDI for us. It's to sort of say, okay, within the themes, within the world that we care, or sort of the world that we want to create, what does that mean from an EDI perspective? And where do we need to, how do we sort of embed that in the way we work? Both in terms of sort of risk mitigation, but also in sort of an upside value creation point of view.
So we have one question coming up, but DEI is clearly not just an investment strategy for you, but it's basically your whole raison d'etre, for the company.
Absolutely.
And I'm just curious, as I turn to the audience here, if others in the audience actually use DEI as an investment lens mechanism in their investments or as a strategy. Maybe hold that thought while we ask the question. So we've got someone in the back there.
Hi, my name is Kapil Kanungo. I represent Incofin Investment Management. So really interesting thought on supporting overlooked founders. One of the questions I have is oftentimes many of the aspects of diversity are not visible. So race, gender, nationality are still visible, but there are a lot more underlying variables that are not visible. So how do you see diversity when you're thinking about supporting overlooked founders?
Can you just elaborate on that last point? We understand, I think, the diversity and the race and the gender aspect, but give us an example of what you think may be overlooked.
Sure. Think about socioeconomic status, especially, two founders would have grown up, say, similar race or similar gender, but have very different upbringings because, say, one of them came from a very underprivileged socioeconomic background compared to someone else. But that's not something that's visible, and that's not something that's so deeply personal. So it's not something that you would ask the individual. So how do you account for these things?
Excellent question.
Fantastic question. Yeah. And it's a messy answer. We learn as we try to do this, and I think you're absolutely right. One of the big takeaways, I think, from the first years of trying to do this is it's a very nuanced picture that you see, exactly because of the points you're sort of making. But, I think the broader point, though, being one, we define diversity. We try to look at this from multiple dimensions point of view. So I think often the journey is you start with gender, you sort of think about ethnicity. I think that we see that happening also in the fund managers we invest. We often then also try to bring disability, age, sexual orientation, religion, faith to the equation. One thing we did, as I said, we're sort of a market building organization. We also have a tool out there that helps social enterprises and fund managers define their impact objectives. It's called the Outcome Matrix. We've just revised it last year. And to your point, one part of the revision has been around, clarifying these dimensions, bringing more dimensions into the awareness of enterprises and investors, but also highlighting the intersectionality, right? That there's actually a relationship between different dimensions of disadvantage. We see that in, for example, in our investments in social property, where we take a gender lens, but there's also then there are socioeconomic factors that play into this, et cetera, that overlap and make create a much more nuanced picture.
Thanks, Philip. We may have one
There's one question
Comment
from
online.
outside, and
All
then
right.
we have to end this interview. I'm sorry for it. And the question is, how do you deal with aspects of DEI there that are very sensitive? You said something about it, and especially the question, when and how do you bring them up in the investment process?
Good question.
Very good question. And again, I think it's work in progress. We have a very diverse set of fund managers we invest in. So at the moment, we are in the process of defining that, what the sort of the minimum threshold looks like for us. It's going to be a phased approach. I think that's what will work for us. It's also sort of dependent on the stake we take, on the size of our investment, or how much influence we actually have when we invest into a fund. So it's those of sort of criteria that we're trying to take into consideration when we address EDI issues with our fund managers. On certain aspects like gender, ethnicity, they increasingly become just part of the normal conversation we're having.
And as we wrap up, I think on this point, for the investors and the allocators of capital in the room, I think when you look at whether any aspect of DEI, whether it's gender or race or what have you, and you're making a decision with a fund manager, you have to first decide whether that fund manager is living the thesis that he or she is presenting, either on gender or diversity or inclusion. So I think that's a very important consideration. But with that, back over to you.
Vipul, thank you very much. Philip, thank you very much for your contribution today. And I ask the audience an applause for those men.